What do you like in Seagate technology?
Well, so Seagate Technology is trading at a higher dollar figure. And so we have to do a different trading strategy for premium selling. So I'm looking at a 3 month chart, but I'm going to zoom out to a 6 month chart here. I love that pattern. I love those sideways choppy patterns. Those to me, whenever I see them, I see opportunities to create ongoing income streams, which is just the cat's meow when it comes to trading, right? And Seagate is a company that's been around for a while since the whole PC revolution of the 1980s, 1990s. They've been good at, embracing solid state drive technology versus actual hard disk magnetic storage. They've been, keeping apprised of the latest technology. So you can tell they're doing well. They've got great earnings numbers. They give a huge chunk of money back to people who own their stocks. If you think about it, if you just simply own Seagate stock, you buy it at where it's trading now around $100 a share. You're guaranteed a 3%, 2.1, 2 point something like that, 2.8% return just by owning the stock. And sometimes that's even better than a savings account. So the people who are investing in Seagate don't necessarily care what happens to the stock price so long as it stays, roughly around $100. They don't care if the stock goes up in price. It's a well-run company. They're going to earn better than they would by putting their money in a savings account. So Seagate is like my ideal pattern of a company of, fundamentals checks it, technicals checks it. The only thing is Seagate is trading at a little higher price. So unless you have, a multiple $100,000 portfolio, you probably don't want to use our traditional premium selling strategies on Seagate because it's expensive. So the alternative is what I call legging into a condor. And that's a lot of like nerd geek speak. Basically, all we're going to do is put vertical spreads on at bottoms and tops. Now, the key is, and I've seen people totally um, have their fortunes obliterated because they don't trade vertical spreads correctly. And more specifically, they don't manage the risk of vertical spreads correctly. Realize that a vertical spread could go from profit to full on 100% loss in a snap. And so when you size your position, even though these things are super inexpensive, vertical spreads are known for being inexpensive. You only want to invest as much of your portfolio as you're willing to lose. So if you're only willing to have any one particular trade lose to your portfolio, say 2, 3, 4%, then don't take any more than 4% of your portfolio, 3%, 2%, whatever that number is, and buy these things, right? I've seen people who put like half of their portfolio into these because they're saying, oh, these are so cheap, right? So I'm just going to buy a bunch of them. And then they go to zero and they lose half their portfolio. And they don't correlate that at the time of purchase because for some reason people are very optimistic and they look at what the win rate is and not what the ramifications of a full loss are. But understand that vertical spreads, when they lose big. So make sure you only invest the amount that you are willing to lose because you could lose it. With that said, I would do a vertical spread right now. We got a nice signal back on November 20, and then it got follow through the next day. But we've actually had a little bit of a pullback, somewhat of a double bottom. And so, not today, but maybe in the beginning of next week, buying some Seagate bull vertical spreads. And I don't care, there's this big debate on credit versus debit spreads. And if you don't know what I'm talking about, it doesn't matter. They're synthetically equivalent. They're the same position. So whether you want to do a bull call vertical debit spread or a bull put vertical credit spread, it doesn't matter. They're the same thing. They work out mathematically. If you do a credit spread, you're going to need a margin account, but whatever. That's a whole other discussion that really comes to I've had people who stomp up and down and say credit spreads are the only way to go, but I then show them mathematically that debit spreads are the same thing. It doesn't matter. Just a bull vertical spread, whatever variety floats your boat. I could see putting one of those on, like a 195 bull vertical spread, and then allowing that to appreciate. And basically, every time we get a strong top signal, we'll go ahead and close that bull vertical spread, and we'll open a bear vertical spread. Again, the variety doesn't matter. And we'll just oscillate back and forth between those two as this goes through. And if you're really close to expiration, then you may not have to close the opposite vertical spread before you open the other one. You may just let time decay, because this is also going to allow that timer to work for you. All of these vertical spreads you're going to do are near term, meaning 3 to 5 weeks to expiration. So that's what I'm looking at, Sip. I'm looking at a bull vertical spread expiring December 20th, third Friday of December, probably 95, 100. It's not going to be today on this shortened day. This shortened day, by the way, has hardly any volume, meaning there's no traders. So despite the market being up, it's just a few voices speaking loudly. So I want to see what's going to happen on Monday. But if I get follow through on Monday, if I haven't already placed a trade on Seagate Technologies, I'll be placing a trade like that.
Awesome. Two interesting facts that I stumbled across. Headquartered in Dublin, Ireland. I was kind of surprised to see that. 7 billion in revenue, so they've got a pretty good product. Nice little little customer base.
I have personal. So when I worked at Hewlett Packard, I worked at Hewlett Packard in their California off of Campbell Avenue, Santa Clara, California campus. And that campus was the manufacturer of a device using lasers that hard disk manufacturers back in the day. And now I'm dating myself, but basically our only customers were Seagate, Western Digital. Who else made hard disk? There was only like 5 customers, and there was no reason for Hewlett Packard to move the manufacturing of this one device, because we only made like 5 a year, right? But they would go to these companies, and Seagate at the time was headquartered on my drive home, because I would drive home from Silicon Valley, Santa Clara, San Jose, all of that, to the beach, because I never wanted to, I just got through talking about my lifestyle. Even when I had jobs, I didn't want to live in like nerd, Silicon Valley. I would always drive over the little mountain. It took like 50 minutes to get to the beach, Santa Cruz. Well, I guess the people at Seagate thought the same thing, because on the road down to Santa Cruz was the Seagate headquarters, and it was very cool looking and all that. But I remember when they decided to pick up and move to Ireland. Ireland has amazing tax for big corporations. A lot of big corporations moved their headquarters to Ireland, because Ireland was like incenting companies with tax, benefits, like zero corporate taxes and stuff. So Seagate moved everything to Ireland. And so that's my personal experience with Seagate and Hewlett Packard. That was a whole nother invention of myself back in around 2002. So we're talking about 22 years ago, but very interesting story.